Mistakes when processing your payroll can have significant consequences. They could mean that your employees aren't paid, that you're not meeting your compliance requirements, or it could leave your business exposed to a heavy fine. Let's take a look at some of the common payroll mistakes and how you can avoid them. When setting up a new employee in your payroll system, the information they provide can sometimes be incorrect. This could mean that the employee gets paid incorrectly or not paid at all. Sometimes employees are assigned the incorrect tax code. This means their deductions are incorrect, and it could mean that the employee faces a tax repayment at the end of the year. We recommend sitting down with the employee when they complete their IR 330 form. This means you can validate the information they provide and also answer any questions that they may have, and it's particularly useful if it's an employee's first job. It's also common for employees to provide the incorrect bank account number, resulting in their pay bouncing. You might want to get the employee to provide a copy of their bank statement so that you can confirm their account number. An employee can easily get a copy of their bank statement from an ATM. Finally, you'll want to clarify that the employee is set up correctly in your payroll system based on their employment agreement. The employment agreement will tell you the employee's leave entitlements, how this leave is to be paid, and their pay rate, which must be at or above the national minimum wage. Your KiwiSaver obligations are really important to understand. Employers must make a minimum contribution of 3% if an employee is enrolled in a KiwiSaver scheme. You should check the employee's employment agreement because this could state a higher contribution rate. The employer contribution is on top of the employee's own contribution. Failing to meet your KiwiSaver obligations could result in fines from IRD, which they will follow up on. If you have casual employees working for your business, you need to make sure their leave entitlements are correct. Casual employees are entitled to accrue leave or to be paid out 8% of their gross earnings as holiday pay. They may also be entitled to sick leave depending on the hours worked and the duration of their employment. This often trips employers up, which could leave them exposed to large payouts. Finally, you need to make sure you have the funds available to process your payroll. Even if you have a direct debit set up to pay your employees, you still need to check you have the funds available to process the pay. If you're using a PAYE intermediary, be sure to transfer the exact amount stated, or there is a chance your pay won't run. You could easily set up a reminder in your phone to check that you have the funds available so that your pay runs smoothly. If you do have difficulties with this, an option could be to alter your pay date or frequency to align better with your business's cash flow. We advise caution and diligence when processing your payroll. It's likely your biggest business expense, so don't let it cost you any more than it needs to.